Good morning. It's Terrific Tuesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: broad-based rally in stocks, fallen angels not so fallen, and Lagarde's comments. The Dow Jones Industrial Average rose more than 400 points on Monday, clawing back some lost ground after 4 consecutive weeks of declines, as investors piled into economically sensitive stocks, including those of banks and energy companies. At the end of last week, Treasury Secretary Mnuchin and House Speaker Pelosi revived hope of another coronavirus stimulus package. We didn't see any new developments on Monday, but stocks leaped higher on the possibility of a new deal, and reports that President Trump will announce the shipment of millions of coronavirus tests to states, urging them to use them to reopen. The day's gains were broad-based. 27 out of the 30 stocks in the Dow was higher, along with 11 sectors of the S&P 500. JP Morgan Chase and Bank of America both rose about 2.5%, while Chevron was up about 3% as investors snapped up beaten down stocks outside the high-flying tech sector. Financials and energy sector, which are economically sensitive, were the best performing sectors of the S&P 500, both rising about 2.3%. In other markets, HSBC added about 9% after its biggest shareholder raised its stake, while an index of lenders rose the most in a month. Shares in Europe, in the meantime, rose the most in 3 months. So the pan-continental Euro Stoxx 600 was up 2.2%. Diageo shares rose more than 6% in London after the maker of Johnnie Walker and Smirnoff said its outlook had improved. In Asia, most benchmarks climbed. Japan's Nikkei was up about 1.3%. Hong Kong's Hang Seng was up 1%. In the bond market, the yields are still stuck around the same 0.66 to 0.65 kind of mark on the 10-year treasury, while the crude was higher by about 1.2% to settle at about 42.43. The dollar in the meantime fell across the board, though losses against the yen were minimal. Gold was higher. Asian equity futures are all in the green. On equities, Uber shares rose about 3.2% after the ride-hailing company won an appeal over the revocation of its operating license in London, ending for now a year-long tussle with the regulators in one of its biggest global markets. Inovio Pharmaceuticals shares stumbled about 28% after the biotech company said that a planned later stage trial for its experimental vaccine was on hold because of questions from the US FDA. In Japan, entity plans to turn Docomo into a wholly owned subsidiary through a tender offer that could be Japan's largest ever. The take private deal would be worth about 4 trillion yen or $38 billion. The news comes as PM Suga makes a reduction in mobile bills charged by Docomo and other major carriers a priority for his new administration. On the fixed income side, the pandemic's economic shutdowns prompted dire warnings that record volumes of corporate bonds could lose their investment grade ratings and become what investors call fallen angels. So far, though, the fall hasn't been as extreme as predicted. While 2020 has, by some estimates, already seen a record value of corporate bond downgrades to junk status, fallen angels are still falling short of the worst case estimate many analysts predicted this spring. The overall share of investment grade corporate debt rated BBB, the lowest category before it turns into junk status, is still hovering around the 50% mark where it was at the end of 2019. So call it support from Fed, call it the issuances that have happened, or the fact that a lot of companies raised money to shore up their balance sheets and increase cash levels. All of that has helped in making sure that the downgrades have not happened in the pace that many market participants were expecting. On the FX side, the most important events that we're looking forward to this week would be the Chinese PMIs would be coming out tomorrow, German labor data, Australian manufacturing PMI, and we cap it off with the US non-farm payrolls, which will come on Friday. ECB's President Lagarde spoke this morning and she talked about dissent within the central bank and the effectiveness of negative interest rates. While she said dissent and discussions are healthy among members of the executive board, market fears that the division could endanger future policy response. Yes, she did mention that they are ready to deploy more monetary stimulus to aid the recovery. The euro exchange rate isn't a target for the central bank, is what she echoed, but she also said that the prospects for the future remain uncertain. The best performing currency on Monday was sterling, which broke to the upside after 3 days of tight consolidation. Brexit talks are back this week, and investors hope progress will be made. But I also feel that it was more of a relief rally on the GBP after a big fall that we saw in the past couple of weeks on the back of dollar weakness yesterday. Australian dollar was a close second. Like sterling, Aussie sold off aggressively this month. It fell every single day last week. The currency was helped by reports that banks are retracting their rate cut call, and the Australian government sees iron ore prices remaining high. Australia has successfully battled the second wave with only 4 cases that are reported on Monday. That's the update. Stay safe and healthy, everyone, and speak tomorrow.